Boom. All right, what's up, everybody? Welcome to the weekly recap. Right, we're going to be breaking down tons of valuable stuff. Right, we're going to be breaking down, especially in this recap, right, how to deal with bad behaviors. Right, like what sort of actions you can take as a trader that are going to help you take more accountability and ownership of your winning trades and your losing trades, right? Because it's very important to understand and be able to identify your strengths and your weaknesses, right? So in this lesson, we're going to be breaking down, right, not only our edge and how we identify opportunities on the market, right, but basically the behaviors that limit us from success and, good behaviors as well, right, that help us make tons of money and solidify our edge as traders, right? So we're going to be breaking down this week. It's a very good week. And, we're just going to hop right into it. So, Todd, how was your week, man?
Oh, man, I didn't trade much. I traded like a day, and then I got home at like 2 o'clock and made a little trade. I went back and looked at what I would have taken. And I was like, damn, wish I wouldn't have. I'm a contractor, so I got to go babysit workers. So.
You know what I really respect about that though, Todd, and I don't know if I would be able to do it. Is actually going, hey, I'm not 100%, so I'm not going to trade. You know what I mean? That's a skill. That is a skill of itself. I promise you, right? That discipline of going, hey, I'm not in front of the screens. I mean, we all got phones. We could all get in a trade in a matter of minutes. Doesn't matter, seconds. So, shout out to you for actually waiting till your edge was 100% present.
Yes, sir. I can't. I don't know. Some people say, why don't you put on a trade and then set your stop loss? And I'm like, I can't.
Yeah,
I don't know. I can't do
it. It's impossible, man. Like I highly advise don't trade and drive.
Oh, definitely not.
Do not trade and drive. And I'm the same way. I gotta be 100% there.
Yeah, the other morning I was looking at that 4100 area on the ES, and I was like, man, I know it's going to come down there. I'm going to get a buy-in, and then I came home. I was like, it did exactly what I wanted it to do. I didn't take it.
It's crazy. And I know we've talked about this before, but just price action on ES versus SPY, or the whole futures versus ETF argument, man, it's really crazy. Like I've been, every day, obviously I put in the pre-market plan, but I've been really solidifying my plan through the future, and we always talk about it. I don't care if you trade futures. I don't care if you trade options, right? If you're not looking at the futures chart, you are limiting yourself. And we're going to kind of talk about that today, right? Like, and one thing I want to talk about is how, like in the pre-market plan on Friday, right? I was like, hey, for me to be bullish, I need to see market-leading equities have strength, right? And that played a very big part into trading, understanding the conditions on Friday. Because if you come over here and look at Apple, right? I mean, look at the double bottom Apple presented. It was perfect. Like, and when I'm saying double bottom, I'm talking yesterday's lows, right? Like, so I've been using yesterday's lows and yesterday's highs as demand zones and supply zones, and it's really been working for me. But look at this. This 162 area was strictly buyers. You know what I mean? Like buyer season. Like, look, on Monday, Bayesian candled right out of it, ripped. Thursday, came right into it, Bayesian candle out of it, ripped. Friday, same story, right? Came in, ripped right out of it, and just knowing that and seeing that really played a vital role in understanding a bullish scenario on SPY and on QQQ.
So there's so much to look at all at once. Yeah. I don't know how you guys do it. Do you guys pull up like 4 screens at once? Because often I only have, how you have charts and then flexible grid?
Yeah.
I normally only have like 2 charts pulled up on each one.
Me too.
And a lot of times I'm at school, so I don't have like another monitor. Right. So I literally just got my laptop.
Yeah.
And that's all I got.
Yeah. So I'll just switch back and forth, Debo. Kind of how you showed me over here on the little tab, right? Like
you do that?
Yeah. I'll predefine my yellow, my blue, right? Like blue ES, green, QQQ, and I'll just switch back and forth really quick. Because, I was actually, this day in the beginning, I was somewhat bearish on QQQ because we fell below yesterday's lows, right? But and one thing I've really been working on is like, I haven't just been taking the first opportunity I see, right? So like usually Josh would have took this short because we held below the lows, and I just kind of want to see on the 1 minute. I mean, you didn't really get that nice break and retest that I usually like to see. Maybe that was what kept me from going short here. But basically, we held below the lows, but you can see we consolidated right here, perfectly. I mean, we got this perfect wedge. Price struggled to make a lower low. Another bullish indicator, but yeah, no, I'll just switch back and forth, but
yeah.
But patience really saved me a lot of money this week. I tell you that, because there was a lot of times where I wanted to go long when I shouldn't have, and I didn't, and it saved it. It definitely saved me money. I feel like the demand zones, some of them weren't really respected like they usually are, but that's just a whole part of being able to identify the market conditions.
Yeah, honestly, it kind of looked like it could go both ways this week. I know he kind of traveled in a bit of a zone, but
so what kind of led me to overall like bearish conditions was this rejection over here on the daily time frame at 413. This was a supply zone I had my eye on for a while.
yeah.
So when we rejected this on 4/4/23, this was kind of like, all right, sellers came in, and they did come in with strength, right? You can see right here, this was a beautiful, beautiful short day. Nice little double top over here, rejected. But it just goes to show you can have a strong supply rejection, but if buyers want to buy that dip, they're gonna find a way to do it, and that's definitely what happened.
Yeah, I mean, I don't know if you had it marked out, but that demand zone that you have for Thursday and Friday, actually that 406 level was key.
Yeah.
That went all the way back to a break and retest on
yes.
SPU.
I'm so happy you said that, Darren, because that's in the pre-market plan. That's actually what I was going at. So on QQQ, this 31240 area, right? We'll call it, or we'll call it 313. Yeah, we had this resistance that we ripped off multiple times, like 4 times, and then once we got above it, we all know supply then turns to demand, right? And then that's exactly what happened that day. And I think the 1 hour made it really nice. Yeah, you can see it right here. So resistance, right? Break through it, and that's what I love so much about just chart patterns and what our edge consists of is the higher time frames give you the conditions, right? So anytime like you're trying to identify market conditions, obviously there's a bunch of stuff that goes into that, right? News, fundamentals, right? Volume. But as far as finding yourself in a large break and retest on a 1 hour time frame or a daily time frame, that's pretty much a slam dunk, right? Like that's what I use to identify my zones.
Yeah, I mean, I think also the key here is that we drew a zone and not a specific level.
Yes.
If you had a specific price level drawn out and price kind of broke through that at the beginning of the day, that could have set you up in a super bearish state of mind.
Yes.
When in reality, all we were doing was looking for a zone where buyers were going to step up. And look, they did.
Yeah.
Literally, they did as soon as we broke into it.
So
that's that whole idea of supply and demand as opposed to support and resistance, like actual price.
Yeah, absolute 100%, right? And I know you guys heard me say it before, right? I really don't like the specifics of it, right? Like even though it is good to be specific at times, and at times we will see these like perfect, down to the cent rejections, but I think Todd said it last week, like it's all about location. And like if like you said, if you were to set this up perfectly on like the cent, if it'll let me click it, there you go. I mean, it would kind of be more up here, And then what would have happened, just like you said, Darren, that would have aligned right here. And you got to think that's probably what most buyers thought right here. They were like, oh, look, perfect scent rejection. And then we break through it. And then that all those sellers, right, just turned into liquidity for buyers this day.
Yep.
And literally price rallied. And another thing I've been doing is once you start to see these rejections, if you're struggling, right? So one thing I did Friday, is I actually didn't catch the initial move in the beginning, because I got called away on something. But what I ended up doing was catching this bull flag right here, right? This consolidation. And what helped me to do that, right? So say you're the type of trader that doesn't want to take the first opportunity, right? And even though you get this Bayesian candle out of demand, right? Say you see some supply up here and you don't feel comfortable going long, right? One thing I'll do is wait for price to consolidate and then go on a larger time frame, right? Like the 1 hour, and you can see you're getting this Bayesian candle on a 1 hour time frame. That is a clear indicator, right? That sellers tried and buyers stepped up, right? So then, that kind of helps me understand the conditions even more. And then it's a little easier going, okay, I'm looking at this in a bullish state of mind. What do I need to see to go long, right? And then I just drew that trend line there. And once we broke out, I was targeting end of day, and I'm pretty sure the same thing happened on SPY.
Yeah, a lot of the times that's kind of how I trade. I heard somebody say one time, you don't have to be the first one to the party,
Yeah, exactly. And
you wait for the move to show you the direction, and then snipe it from there. You don't have to be first to the party to make money.
Right, like I think that goes into the whole predicting versus reacting, right? Like the way I used to trade, right, is I would get this I'd have my demand zone, and then I'd get a nice green bar, and I'm like, oh man, I'm in that. You know what I mean? And literally, look, that just provided nothing but liquidity for sellers. And even though it ended up going our way, right, that entering right here will skew your risk reward like no other, right? You could get stomped out down here. I mean, that's a dollar away. That's about 50% on an option trade. You know what I mean? So that right there is unacceptable. Darren, I know you were talking a lot about the 5-minute candle. You want to touch on that real quick?
I cannot say how much it's changed my trading this week. Just looking at the 5-minute chart, it's just made it way clearer in my mind. It eliminates so much noise, and I actually caught this initial move up out of that demand. And 5-minute candles are definitely a big part of that. Another part was journaling, which I'll get to in a minute. But basically, I'm reading this book, Price Charts, Bar by Bar, and basically it says to look at the 5-minute chart and then take your time analyzing the candles, and obviously wait till they close, because obviously last minute the appearance of the candle can change, and there's reasons for that. Obviously, they're trying to trap as many sellers as they can before the move, so they get stopped out, fueling the move to the upside. But another thing which I'll say about Friday, which helped me like crazy, is I remembered, and I actually only thought of it when you guys were talking about journaling at the very beginning, but this initial sell-off I would say about a month or two ago, I made a mistake where I was thinking bullish for the day, but I let that initial sell-off at the beginning of the day put me in a whole bearish state of mind, and I opportunities like crazy. I remember distinctly, I took to my journal and I wrote 3 pages about how as long as your strategy is not proven incorrect, you have to stick with it.
Yes.
And without even subconsciously, I was thinking that at the beginning of the day, I need to look how price reacts to this level, and sure enough,
because look at this.
Came in, and it didn't make me bearish for the day.
Right.
And honestly, I can attribute that to just journaling the heck out of that day when I was so mad at myself for letting my plan be invalidated when buyers were actually there. So that's a not so subtle plug for journaling. Journaling your trade. And how that really helped me.
It's so important, right? I want to talk about this today. we know the bad behaviors, right? We understand holding trades for too long. I've identified entering quickly, the wrong beliefs, the accountability aspect, the greed, the impatience, right? We know and we understand the trading errors, but what actually are we doing about them? So Darren, you have a perfect example right here where you made a mistake a month ago. It doesn't even matter when, but the last time you made that mistake, you journaled so intensely, right? Like you said you wrote 3 pages of why you made that mistake, what was going through your head, what was going through your mind. Right. So I talk to a lot of traders, and a lot of them, they'll go, hey, I'm making these mistakes and I don't know why, or I just made a stupid error. Right. And these errors cost us so much money because not only do they make us lose trades, but they keep us in a state of mind of losing. Right. Like, anyone that's been successful in anything, right, they understand momentum. Momentum has to be built. It has to be earned, right? And the way you earn this momentum and this conviction and to become a consistent trader is through journaling, right? It's so important because if you don't journal, trust me, I did it for 3 years, didn't journal. I continuously made the same errors every single day for 3 years, dude. Threw a fortune away. I can't even. I don't even want to say how much money I spent becoming consistent because I didn't journal. When all that never needed to happen, right? We talked about it earlier, Darren, where a lot of people think it's time that makes you consistent. And though being in front of the chart helps you become consistent, if you are not working on your trading errors daily, you aren't going to make it, right? It's cold hard truth. It is what it is, right? If Kobe never was in the gym every single day working hard to master his edge, he wouldn't have been one of the greatest basketball players ever lived, right? So like I always relate trading to sports because it is a performance, right? It's something we show up to every single day. We put in work. We sharpen our edge, our skills, right? And our tool, our basketball is our journal. You know what I mean?
100%.
Yeah, it's so important. That's awesome though. So think that just because you spent, so much time writing it down, what was going through your mind, right? How you let an initial sell-off contradict your trading plan, right? And how you're never letting that happen again, or at least you're not going to just, expect to change, right? You're going to dive into the journal. You're going to put as much effort as you can into making sure that never happens again. I really believe that is how you become consistent.
Yep. And another critical factor of that journaling was when I saw the mistake that I made, I initially took accountability for the trade.
Right.
I wouldn't have learned from it if I said, "Oh, that was just because of some technical that wasn't set up right."
The market.
I took responsibility. Yeah, I did not blame the market. I took responsibility, and I said, "How can I change this? Which of my behaviors has to change?" for me to not make this mistake again. And I wrote that down in my journal, and I made it something that I can change. I didn't say the market did this to me. I didn't act like a victim. And I think that's a big part of how I let it affect my mentality and how I was obviously able to learn from it.
Absolutely. Yeah, like it's one thing to be able to identify your edge. It's one thing to be able to, identify supply, demand, and actually make money in the market, right? But until you can change your expectations, your behaviors, you're never going to make it, right? And I think why so many traders fail is because they fail to realize that's what it takes. You know what I mean? Like I know, like I'm constantly on everybody. Hey, are you journaling? Are you journaling? Are you reading books? Are you studying your wins, your losses? Right? Like this is literally the sacrifice it takes to be able to see in live time our edge, right? Like, and it's easy to go, oh my God, look, Friday, this thing ripped all day. Of course you went long. No, it's not that easy. I promise you, there were traders that went short this day, and that have the skill to identify bulls. But in reality, until you work hard on being able to accept failure, right, and accept accountability, right, you're not going to be consistent. I mean, look at this break and retest right at end of day, right? So like, these are things we look for, every single day. But if we never journaled, I would have never identified end of day as such a strong area of value. You know what I mean? Like it's crazy. Like, and it's, I'm not going to go much longer on it, but the journaling aspect is an absolute must. If you don't do it, you're not taking yourself or your future seriously, like whatsoever. You're just depending on showing up to the game 7 and winning. You know what I mean? Without no practice.
Yes, sir. Process over profit. You got to focus more on the process than the profit.
Yeah, it's
without the process, there is no profit.
Yeah, it's so true. Like anyone, and Mark Douglas says this perfectly. Like all what it takes to put on a winning trade is literally a click of your mouse or a scan of your face. However it is, it takes nothing to make money. Anyone could just go long and get lucky. I did it for almost a whole year. Right? I'll show you guys. Back in when I first started trading, right, was literally right after COVID. I started trading right around here. And dude, look, this was an insane bull market. I'm saying there was like an 80% chance as long as you bought call options, you did all right. You know what I mean? It took no effort to make money right here. I mean, obviously it wasn't that easy, but it really was compared against a year like this. You know what I mean? And it's me and Darren talked about this before. I'm very happy to be going through times like this because this is what will make you an amazing trader, right? But back when I just thought, oh, listen, all I have to do is show up and buy previous day close and go long, right? Yeah, that'll make you money. But what's going to happen this year? You know what I mean? And how are you going to deal with that? And this whole year has been such a just great teaching. It's been such a great learning experience, so because I mean we got crazy volume, we got crazy stuff going on, and anybody listening, right, if you can make money, if you could become consistent in a year like 2022 or 23, you're going to dominate the market.
Hell yeah, we're becoming versatile traders.
Exactly.
That's what it's doing to us, I believe.
Yeah, and I can only imagine when this bull market comes back, considering the dollar doesn't turn to nothing and whatever, we're not going to get into it. But when and if this comes back, we are going to make so much money, right? And it's not because the market's going to get easier, but it's going to be because we as traders are going to be able to identify the conditions so well, right, that we're just going to be able to crush it every single day, right? So just got to keep putting in the work, right? Like the next area I want to kind of talk about, Todd touched on it, is not trusting your process, right? So we have developed a process, right? It's a 5-step process, which basically is a general like 50,000 feet above view of how we make money every day, right? And I go through this a lot on the course, but just a quick little rundown. Step 1 is identifying your market conditions. Right, we do that on larger time frames. Right, we look for our supply, our demand zones, larger time frames. Step 2 is identifying your areas of value. Right, that's supply, demand, end of day, pre-market high, pre-market low. Right, though that's pretty much the main of them. There are others, but that's pretty much what we look for. Step 3 is identifying a chart pattern in a zone with volume. Right, that's kind of like our entry. Right, is identify where we look to go short or long. What we look for, right? That chart pattern, that retest, right? That volume. And then number 4, which is your target, right? Which is your predefined stop loss, right? Your predefined target, right? And basically what I'm saying is every trade you take, you need to go, hey, my plan is to go short at 412 right here, and I'm targeting pre-market low of 410.45. Right? So you need a predefined entry and target and stop loss before every trade. And I know it sounds like a lot, but it really isn't. And then the last step is logging your trades, right? And we just went over why that's important. So like that right there is our edge, right? So that is our process, right? So when we find ourselves, and I do it too, right? So no one's doesn't not go through this, right? But when I take a trade and I'm not trusting my process, I always fail. It's inevitable. I'm vulnerable. I'm not thinking properly, and for whatever reason that is, it's I'm making bad trades. So I highly suggest everybody goes through our process or their own, right? But I can only speak for mine. When I trust my process, I make money, and when I don't, I fail.
Agreed.
Yeah, like that, and that played out heavy this week, right? And that happens sometimes. And listen, if you're not and we'll just call it like in the zone, right? Like if you're not feeling it, right? Like so say you've identified uh we'll just use this as an example, right? This right here was 4-3. What day was this? This was Monday. Yeah, so Monday was a very good day. But I'll just tell you guys how I traded it. Basically, this right here was very similar to Friday. Let me just bring out the 1 minute, right? Kind of help show how this went. So we've been seeing a lot of ABCD patterns, right? And what that is, if anybody doesn't know, it's a continuation pattern. It's how it's a great way to trade a continue like a bullish uptrend. And basically what it is, and I just kind of want to mark that level out because I had that my level marked out. Actually, though, I had it like this though. So I had it as a supply zone at first, right? So my goal here, right, and I had my pre-market highs, my lows, right? I identified my, areas of value, right? And then going forward, we started to rip initially, right? Now, I didn't just enter this trade immediately. I because I don't like to just go, hey, buyers are here, let's go long. I kind of like to let the market tell me exactly what she's doing. And so once we ripped into this supply zone and started to consolidate, right? So how this works is this is A, right? This is B, this is C, and then this is D, right? So the way you want to trade this is you want to get in on C and then target D, right? And now for whatever target was up there, the entry of this, right? So I had my area of value. So once we ripped into it and didn't get immediate sellers, that was telling me that buyers were creating demand in this area right here. And now what that means, right? So buyers ripped up into this 409.80 area and sellers didn't overpower it, right? And buyers consolidated, and then I'm looking for volume to tell me the rest. And then what happened here, since we didn't get that initial sell, this is when I draw a trend line right here, connecting the highs. And once we break out of it, that's when I go long, right? And then, that's exactly what happened there. You go long and then you target your opposing supplier demand zone, right? So that's how, what was this? Monday was traded. And then let's see right there where we got that nasty rejection from. But basically what I'm getting at here is that was my process, right? So that right there was my plan. If anything else happened, I would have gotten out of my trade, and that's completely fine.
So you were basically looking to see some kind of strength at that supply zone, which you had,
yes,
which you had drawn out.
Exactly. Hold on, I'm trying to bring it back real quick. So what I was looking to do, right, is this was supply. And my trading plan, right, was, hey, if price can rip up into here and we don't get immediate selling, right, and buyers hold their positions, right, they defend them, right, because there's sellers right here, but it's up to the buyers to remain consistent, to show their strength, right? And we didn't even come down to VWAP. My first initial thought was, hey, if we come down to VWAP, go long, right? And that didn't happen, right? So basically, in a nutshell, we consolidated in this area of value, which is a chart pattern in a zone, right? This is a bull flag in a supply zone, right? So that still validates our process, right? That still validates our edge, even though it's not a basic reversal play, right? This is a continuation play, right? We're looking for price to consolidate in an area of value, right? And so we get this bull flag in supply, and then once we break out with these large candles, this is when I'm in the trade, right? And even though this was a like $1 move or $1.25 moved, $1.50 move, this still paid almost 100%, right? Because
base hit.
Simple base hit, right? We don't need these huge trades, right? I think Darren touched on it last time. Once you start getting those expectations of these super large trades, that keeps you from looking at the information that's in front of you in a profitable way. You know what I mean? It was just, that's it.
Yeah. Well, there's actually a clear distinction between, you can't just take your profits at 40% and say that's a base hit.
Right.
You need to set your target to a reasonable target and then wait for it to hit your target. For a while here, I was taking profits at like 40 to 50%, thinking that those were base hits when I didn't even hit my target. So that's not what I mean by base hits. What I mean is set your target in a reasonable, even like you said, even $1.50, and then take your profits when you hit your target.
Yeah.
So that's why I'm base hits.
Yeah. No, and basically that's trusting your process. You know what I mean?
Yep.
Like, and there's going to be times where you trust it and you make, you lose money, but it's so much more valuable to trust that process. And then going back to the logging aspect of it, this builds conviction in your process, right? So, I can sit here and tell you till I'm blue in the face, follow my process and you'll make money. But until you truly believe in this process, you're not going to trust it and you're not going to act on it when you need to. You're going to be late to the party, right? So say you're just kind of on the Discord and you're like, oh, Josh says go long here. I'm going to wait a little bit, get a little more conversation, and then you go long right up here because you feel like you missed it, and then price comes down, you get stomped out. And so until you believe in this process, and the only way to do that is to trade it and develop that conviction in it, right? Until you're there, you're gonna struggle, right? And that's fine, but you just got to find a way to come up with a trade plan and make sure you stick to that trade plan daily.
Yeah, and honestly, I would encourage people to come up with your own plan, maybe even put on a trade, and then just see if what Josh posts in the Discord is confirming the move that you already want to do.
Right.
And maybe it's not, but I think it's way more important to be able to make that call yourself, because I don't think you're honestly going to make progress if you just sit around waiting for Josh's call and then put on a trade. I mean, it might make you money, but it's not sustainable at all.
Right.
And you need to, like you said, you need to develop that conviction for yourself.
Yeah, and that accountability, right? It's so important because there's people out. Anyone can go, all right, this guy's going long, this guy's going short, boom, right? And then you either make money or it doesn't go the way, or you don't know where they get stopped out or XYZ, right? So I definitely know there's some members on the team that they've literally said exactly what you said. They go, hey, I come up with a trade plan every morning, and then I validate my zones with your zones, and it's been working very well for me. And that's super important. That's super awesome to hear, because that's literally the goal, is to teach everybody how to fish and how to hunt. And that's definitely it, because until you repeat it daily and just go over it, it's not going to happen.
Yeah. Can I give another example of holding on, of obeying your zones on Thursday, I think?
Absolutely.
On the QQQ?
Absolutely.
So Thursday, QQQ, I think we opened up, I don't think you have, well, you can kind of see end of day, but that one wick right there, that one wick was, it was not going into end of day. That was actually going into the lows.
Yeah, of yesterday. Yeah.
Or the day before. It's incredible how accurate that was.
Yeah, look at that.
I mean, look at that.
Wow.
I'm pretty sure to the cent. So that's something that, yep.
Hold on, ready?
Look at that.
The low of this candle is 317.83. The high of this is 317.89. Yeah, so literally off by 5 cents or 6 cents.
Yeah, so crazy. So I had my demand zone drawn out. You don't really have it, but whatever. It was down.
Right here.
Down near 315.
Yeah. Oh, okay. You're talking about this one.
No, I'm talking about, that's my target.
Yes.
So that was my entry candle, and I had my demand zone, which was actually fairly clear from before.
Right. Yeah. So your demand was right here. Perfect. Okay.
Yep.
Just like that.
Yep. So I had it from there.
Like that.
And I went short, and I only held this trade halfway down.
Right.
And and I don't know, I can't really remember exactly why. I think I was watching this is what I was doing. I was watching level 2, which I have been doing recently,
Yeah.
and it's been super helpful. But just because you see buying on level 2 does not mean that you should play long.
Right.
Basically, this is what was happening. Buyers were coming in, and as price went lower, they were getting stopped out.
Yeah.
So unless you see buyers and it's met with strong up movement, that's actually those buyers are gonna fuel a move to the downside,
Right.
which was the opposite of what I was predicting in my mind.
Right.
But I think I actually used it as confirmation to get out of this trade because I wanted to lock in profits. But I mean, I was beating myself up. I had my target, and that was my plan in the pre-market, was to target this 315 zone, and I eventually came down here. Yeah. But
and that's like so basically that's a phenomenal analysis though, right? Like, so you're in your mind, you're going, hey, if we could get below yesterday's lows of 318, I'm looking to go short, right? And you didn't just go short here, right? You waited for this beautiful retest, right? And you go short, right? Perfect entry. You got your target down here, and that's where level 2 gets a little tricky, right? I've had a lot of people go, hey, can you talk more about level 2, right? And I do plan to do that as I can find an easier way to talk about it. But basically, as a trader, you need to be able to look at level 2 and do exactly what Darren just talked about. And what that means is you need to be able to understand, right, what level 2 is telling you in specific trending markets, right? So you're in this is a bearish market, right? You're in a short position and you're seeing buyers on level 2, right? And though buyers did show up, they literally provided liquidity over and over for sellers here, right? So look, you got your another break, retest, break, right? Break much lower. So it definitely takes a little while to be able to use that level 2 like that. Shout out to you, Darren, because that's a really good trade, and starting to work on the whole level 2 things even better.
I encourage anybody. So I wanted to know about level 2, and I couldn't find anybody who was really explaining it well. So what I did is I went to the on-demand section, and I went to a day where there was a clear rejection of a level of a demand zone that everybody knew, and then I pulled up level 2 and I watched what level 2 was doing when price came into that area. And as I started doing that and taking notes and then watching it in real time, it slowly kind of started to make sense in my mind. And I hope that eventually, when we get some good examples, maybe I'll try to screen record some trades that I make off of level 2. But then we can bring that to you guys. But if nothing else, just do that like I was doing. Pull up on demand on a day like this. Maybe even pull up on this day of Thursday. Look what the bid ask looks like on all the limit orders piling up, and it'll slowly make sense in your mind.
Yeah, one thing I've noticed, right, is when you, just like you said, when you are in an area of value, right, look to see what exact limit, like what orders are getting hit the most, right? Which ones are kind of repeatedly showing up, right? Those are levels of interest that you definitely want to keep an eye on. It definitely takes time. It's definitely a skill, and all traders should definitely use it because it's just another indication of identifying the market auction, right? So we do it in a graphical presentation, right? And level 2 is just a little different. It's more of like a linear way of explaining, right? Like who's getting in and who's getting out. But more or less, dude, that's a great trade right there. Phenomenal.
If I can touch on Darren's point for a second. He's saying when it comes into the zone, he's looking at the level 2. I do. I kind of do the same thing there, except I look at the time and sales.
Yeah. Oh, okay. Yeah.
And on my side, my size up at the time and sales, I change it to at least 500, so I can see the big buyers coming there that can actually move it.
Yeah.
Yeah, so if you start seeing like 500 bids coming in right in a demand zone, that's probably large money, and that's exactly goes back. That's a really good point, Todd. That is our edge. We cannot move the market, right? As retail, there's nothing we can do to make a trade go in our favor. The only thing we could do is learn to spot large money getting in and out of positions, right? And that's a really good way right there to identify that, right? So if you're in, so a price comes down to 314, right? And on the level 2, you start seeing bids for 1,000 shares, 2,000 shares, right? Super big bids. That's pretty much telling you that smart money has their eye on this area, right? So, and that's just solidifying our edge, right? That's just going, hey, chart pattern in a zone with volume, right? Let's go.
Yeah, and I guess level 2 is the limit orders of the ones that are going to be placed, and then time and sells are actually the ones that have been placed.
Nice.
So that's the difference between the two, but they each have benefits. I don't know. Sometimes I don't know. I just have to practice. I just have to see like which one helps me. You know, sometimes I have them both up, and then sometimes if I'm not really learning anything from time and sales, I'll just turn it off. But it is. It's definitely useful because it's not an indicator. It's not a technical indicator,
right?
And it's actually what is happening in live time, and that's why it's super valuable.
Yeah,
it's like a extra. You're looking deep into the depth of the market,
Right. Yeah, because this right here is what moves the market. This right here, this is exact. If you could learn this, dude, you will be an amazing trader, right? Like, I don't care who you are. If you could understand level 2 and time and sales, you will just be, and it's just another tool in our belt to be able to identify these reversals or these continuations. And, because basically what it comes down to at the end of the day is to be able to understand the conditions of the market and where it's headed, right? If you could learn, hey, like our edge is, hey, we look for specific areas, right? Our zones. We look for reversals. We look for continuations, right? We look for volume, right? Price and volume analysis, right? So any way that you can solidify that and make that stronger is even better. And really shout out for taking control of learning a new skill, right? I think nowadays people just expect to become great traders just by putting on some trades or, by, just hoping that they'll be right the next day, right? So any way that we can make this easier or, more on point is just awesome. That's exactly what you need to do.
Yep.
Darren, are you watching the speed of the tape too? I know a lot of people, they like to, they really don't focus on the numbers. They just look at the speed of the orders that's flashing. Because a lot of times when it comes in the zone, you'll see and say a reversal's coming, you'll see it start flashing real fast and go real fast. That's what they call momentum. From what I'm
That's actually how I do it. One of the ways.
Yeah. I do see the speed. I think this last week I have been looking at the numbers, but I mean, when I do see that, it's just churning through orders, and it's just going super fast. Like, it's definitely going to factor in, but I do try to look at the numbers as well.
Yeah.
But I don't know.
So level 2 you said is the limit. That's the limit orders?
Yeah. Yep. Limit buys on the left and then limit sells on the right.
Oh, okay.
And you can, and honestly, you can look and you'll see as the orders pile up towards the top, those are the ones that are really close to getting filled. If you see a massive order for 50 and it's way down at the bottom, that could just be somebody trying to fake you out and just trying to, I don't know.
Yeah.
Maybe they'll have a huge one for like 40 on the bid and 40 on the ask, so you don't know which way it's going to go. And then the last minute they'll just cancel one of them. And so that's the kind of stuff which can confuse you on level 2, which I'm just seeing over time as I practice it. But you'll see when it is moving in a specific direction, you'll just see like 30, 40, 20, 16, all just really close up to the bid. And you know that those ones are going to show up on the time and sales like instantly.
Right. Yeah. No, that's really good stuff. Yeah. No, this has been another week on the market. Where we're just we're making a lot of progress here, and I absolutely love it. I really do. I'm so happy that everybody's really starting to understand the edge, use the edge. Right. This edge has been we've been perfecting this edge for quite some time now, right? And it's really I just love seeing it work and just continuously present itself. It's so much more than just a bunch of rectangles on a chart. When I first learned supply and demand, I literally, I was like blown away with like how simple. You know what I mean? I'm like, all right, so you're telling me if price can come down into this area, right, that I predefined from yesterday, that's telling, and obviously it's so much more than that, but I just love to see us all get together every day or every day and then weekly and just really talk about it. And it's really just super beneficial stuff. This whole strategy has changed my life, like hands down. And it's just really good. I really like this whole yesterday's lows strategy and yesterday's highs. It's really been helping me a lot.
Yep.
Like we talk about this all the time, but some when you get rid of your pre-market data, it really kind of solidifies it even more. But you do have to be careful with doing that. That has hurt me before, but without pre-market data, this is what the S&P 500 looks like, and you can see it literally came down right into the previous day's lows, and then volume picked up heavy, right? And that's literally what we look for every single day is price to come into a specific area, and then volume to solidify that the move is happening, right? So that's literally the epitome of price and volume right there.
Yeah, I think there's tons. I think there's tons that we drop. All of this stuff that I'm learning, I've been like studying and journaling hardcore for the last like year now.
Yeah.
And these are all things that I'm like only realizing now after all the other things I've tried.
Right.
So like seriously, like check these things out. Maybe try them. If something's not working in your strategy, identify what it is and then switch it up.
Yep.
And like me, like level 2 is new for me. I didn't. It's something that I'm searching out, and these are things that I'm using or I'm finding that can build my edge and solidify my edge, and it's been really beneficial.
Yeah, it kind of brings me back to the whole end of day thing, right? So when I first started, identifying how like end of day played such an important role, like when once you get rid of that pre-market data, it kind of makes it a little easier to see. But you can see right here, we got end of day at 408.72. Price literally ripped into it this day. This was a great day. This sell off, 405. And look at this. It was perfect rejection once, twice on the 5 minute, right? Just perfect rejection. I'm starting to, we talked about this before. Every day, at the end of the day, there's so much volume, right? There's like way more volume than ever, right? So whatever the price is at the end of the day, just is so many shares, right? I'm not exactly sure how it works, but I think there's some sort of liquidity aspect to it where there's so many shares in this case at 408.72 that once price revisits it, all the sellers get their orders filled and then it sells off, right? Like I think that's kind of like the psychological aspect of the price action is there's so many orders here that were bought in that once price revisits it, it's allowed to fill the millions of orders that sellers have or buyers have. In this case, it's sellers. And that's why we get these rejections around this area. On Friday, it was a little different, but it's the same concept, right? So end of day on Friday is 407.63. Now, I'm not telling you to go short every time or expect a reversal at end of day every single day. All what I'm saying is this is an area where if buyers can defend it, it's going to rip. And that's exactly what happened. Or if sellers defend it, it's going to tank, right? Like that's a pretty high probable, scenario because with all this liquidity, with all this volume and all these shares that have been bought and sold, right? People are waiting for that price to revisit the next day, right? You get these gap downs and it kind of works as a magnet, right? Like, I've been journaling a lot, like how often does price revisit end of day, and it's very probable that if you open below or above end of day that you will come down and retest it. That's once again not a 100% fact, but we do see it more often than not, right? So it's very important to keep an eye on.
Yeah, big money right there.
Yeah, for sure.
Yeah, Josh, I love what you said about not just getting out of a trade or not just thinking that you're going to get a rejection at end of day. Because I was in a trade long on Friday, and we were approaching end of day. I was looking at it on the 5-minute chart, and I saw absolutely no as I'm not outside no selling. There was definitely sellers that came in, but there wasn't weakness. I was not seeing any sort of weakness that was signaling a move, and I held all the way through end of day up till that one right there.
Yeah.
And it was basically I could have gotten out. I could have gotten out at that double top. I could have gotten out at end of day.
Yeah.
But if you don't see valid confirmation to get out, that's fuel to the upside, like you said.
Yeah.
All those sellers that did step in are going to get stopped out. Yeah. It's going to move even higher.
Yeah, absolutely. And that's why it's, that brings us back to, it's just nothing but an area of value, right? Like nothing other than this is an area where I'm looking the market to react in. And based on how it reacts, it's going to give me the tools I need to either A, take this trade longer, or B, go the other way. And that's a great idea, right? So, I was trading QQQ, and I went short at end of day briefly, but the way I was doing it was I spotted some sellers, so I went short, got stopped out of my trade really quick, and then took it to the long side once we defended it, and then it continued to run. You know what I mean?
That's how you do it.
This is, let's see. So yeah, this is how it worked on QQQ. So literally we have end of day over here at 3:15.9, right? And we rip up into it. We get minimal selling, right? And this was one of those things where I was like, all right, I'm willing to see, I'm putting enough risk on the table. I'm keeping a tight enough stop, and I'm going to get out of my trade immediately if I, get anything else. Now, we sold off, and then buyers stepped in, right? And then on this initial candle, I was out because this right here made a higher high, right? It couldn't make a lower low, actually, is the reason why I stayed in right here. So we came down to 315.55, and we cannot see 315.54. And then this whole, so then once I stopped out of my trade, look at the volume over here that picked up. Buyers really defending their positions and wanting to get past it, right? That liquidity getting filled, right? And then this is when I was targeting 318.5, and literally that's, right where we went up to 318.55.
Yep.
So, it's, just another way that we look at this is, this is the area I'm looking at. What's it going to take for me to go long? What's it going to take for me to go short? And that's why I love that whole aspect of where does price need to go to prove to me my analysis is wrong, right? So I was short here. I was like, if price needs to go below this low, right? So I can't really predefine that off the rip. I mean, I could have, because you got this little area right here, which could have served as a whole break and retest. But I was to the point where I was like, hey, we sell off. If we can't make a lower low, I'm out. And that's exactly how it worked. And then once again, that volume came in, and then, she rallied.
I'm thinking, you see it end of day right there, and it gapped down. So all them shorts probably took their profit down there.
Yeah, exactly. Yep.
If they were still in it, then that next touch would have worked. But apparently they already took their profit. Yep. That's kind of the way I look at it.
Yeah, and
where the action is, you just need to know which way to go.
Yeah.
And that's a lot of the times that's what I'll do. I'll take a short, and I'm immediately get stopped out, and I'll flip to a long because I'm where the action is. I just gotta be in the right direction.
Yeah. Yep. Absolutely. It's and that's why I love looking at this as a market auction, right? So I know we talked about this before, right? We sit behind screens and we look at it in a graphical presentation, right? But at the end of the day, this is nothing but an auction of buyers versus sellers, right? So, and when there's buyers, right, when there's strength, there's not going to be much selling because, smart money knows I'm not going short here. they're like, Wells Fargo is buying 8 billion shares, right? We're gonna wait till this supply zone, right? Like they have their areas predefined, right? So in between, right? Like I used to get in trades, like say I got in a short position here at end of day, and I was like, oh, price ripped past it, but we got this supply zone here, right? We've all done it where we reevaluate, right? We go, we could wait till right here, you know what I mean? See what happens, right? And then price continues to rally, consolidate, rally, and then you get hurt, you blow out your account, and you don't log your trade because you don't want to take accountability, and then you walk away going, oh, the market did this to me. Like,
Yeah.
what are you talking about? Like, you did this to yourself, you know what I mean? Like, and it's fine, right? Like I said, I did this for years, and I really did, and but I promise you, like, I don't care if I make if I lose all next week, next month, I will log it, I will journal it, and figure out why. And anyone that's listening and that's struggling with that, feel free to message me, right? And message Darren, message Todd, doesn't matter, right? Ask us, right? Like, why, what did you do to help you not do this? Or what did you do to XYZ, right? Like, I really want everybody to know we are here to help every single buddy on this team make better decisions on the market, right? Like that goes to that whole, teamwork aspect. And that was my whole goal with building this Discord was to develop a team where we can all help each other. Because when I help you make better trades, I make better trades. You know what I mean? And not to sound selfish, but when I help others, I help myself. You know what I mean? And just continue to build this team up because it is possible this edge does work. I mean, we've been training it for a while now, and it's just getting better. And it's really good stuff. So like I said, message any one of us, and just continue to take accountability, trust your process, right? And a big thing with that is position size. So when I first started, right, like it was hard for me, like, because I told you guys, I traded back here in 2020 to the end of 2019. So for about a year and a half, I truly believed calls were the only way, right? I didn't believe in puts. I don't think I made one short position my whole first year. It didn't make sense to me, right? Because I was making money off a process that was based completely on a bullish market, right? So once this year started to happen, I started to, run into the same issues. It was hard for me to adjust my perception of the market or my process, right? To actually trust it. So one thing I did was lower my position size, right? So I would go down to one contract. I would paper trade, right? And that's completely fine. Like, dude, just figure out your process and stick to it. And there's going to be times, right, where you know your process, you know your edge, and you're still failing, right? That's okay, right? Like we all run through those times, right? It's completely fine. Just figure it out, figure out why, and don't give up on it. Keep logging it.
Agreed.
But yeah, listen, guys.
Some of the talk to new traders, and I don't know too many of them, but I talk to them, and they're like, "Yeah, I looked at the chart 2 or 3 days this week. I'm like, that's not getting it. I mean, you got to be indulged in this 7 days a week. If you can go, I can't go more than a few hours without looking at the chart.
Yeah,
I got to.
Right.
That's the point you got to be at. You got to nail it, hit it in the head until you get it.
Yeah, that resilience. You're 100% right. You need to be obsessed. You absolutely you need to be able to run through tons of failure and not give up. And obviously, being a part of a team is going to help you not experience that failure for so long. But I 100% agree. You have to be all the way deep in this. You have to be fully committed. And I think most traders are. I think most traders are gravitated to trading because they know, right, like what's capable, what they could become. right? And that's really important. And one thing I used to do that really helped me was I would write down why I wanted to be a successful trader, right? Like I would write down on a piece of paper why I wanted to become the best trader alive. And, a lot of that was family, children, or, I just loved it, right? But it's really important to know your why, because if your why is strong, your how is easy. You know what I mean? Like Kobe or, Jordan or, those guys, their why was so strong that they were willing to go to the gym every single day for 10, 20, 30 years to perfect their craft. You know what I mean? So that it's the same thing with the market. You got to become obsessed with it. You got to love it. You got to breathe it. Read books on it, and just keep moving forward. Absolutely love it. Listen, guys, thank you everyone for showing up. It's 11:58. I know everyone's got to go to their holidays and do their thing. Listen, take time today, Sunday, to perfect your edge. Look at your trades, log your trades. Download that Microsoft OneNote, or copy paste your trades right in it. Get yourself a notebook. Figure out what behaviors you want to change and change them. Right. Thank you everybody for showing up. Message me if you need me, and have a good weekend.
Sounds good. Yeah, have a good weekend. See you guys on Monday.